The information in this recording is general in nature and should not be considered personal advice. Please consult a professional and qualified financial advisor to discuss how this information may apply to your personal circumstances. Thanks for listening.
Hi, this is Adil and Dane from Life First Advice. Dane will today provide an overview of our asset allocation services and the performance of our model portfolios over the last 2 years. So let's get started. Dane, you often talk about helping clients build towards a work optional lifestyle. How do Life First Advice asset allocation strategies fit into that bigger picture?
Thanks, Adil. Sure. Well, before we even talk about investments, we always start by getting really clear on what matters most to you, your goals, your values, and what a work optional lifestyle actually looks like for you. And then from there, we help you figure out how much risk you're comfortable taking to get there. Only then do we design an asset allocation solution that fits, tailored to both your goals and your risk preferences. Most of our clients are busy professionals and they're smart people who could manage their own investments if they wanted to, but they don't have the time or the headspace to stay on top of it all. And that's where we typically come in, making sure things are set up right and kept on track so that your money's working towards the life that you want without needing your constant attention.
Sounds good, Dane. So then can you walk us through the three different asset allocation strategies that we offer?
Sure. So we offer three distinct asset allocation strategy options. First one being a pure index solution, and that's typically for people who prefer a simple, low cost approach to investing. Core satellite passive. This adds in some thematic exposures utilizing ETFs, and we draw up those exposures from our economic cycles research. Core Satellite Active, it builds upon the passive version, but it also includes active fund managers who have a long-term track record of outperformance within their particular themes. And each of these three strategies we make available across the four main risk profiles, being conservative, balanced, growth, and high growth. The BlackRock enhanced strategic models are the foundation of our core satellite portfolios. And BlackRock brings over 30 years' experience managing multi asset portfolios globally. And these models have been used in Australia for more than 8 years. And we chose them because of their proven track record, robust design, and consistent process. And these models have delivered strong long-term performance relative to their benchmarks and peers across a range of risk profiles. So for the satellite component of our core satellite strategies, where we apply our strategic thinking, a main source of research comes from the team at Property Share Market Economics, and this team's led by economists Phil Anderson and Akhil Patel. And their work is grounded in the idea that history doesn't repeat exactly, but it often rhymes. And economic cycles tend to follow a relatively predictable rhythm, roughly 18 to 20 years in length. And at different stages of the cycle, certain themes have a tendency to outperform. So, using this research, we adjust the satellite portfolios to reflect what we believe are the most relevant opportunities for the current phase of the cycle. And as conditions evolve, so do the investments within this portfolio.
Thanks, Dane. Now, as we know that fees are a very critical
Mhm.
consideration for any portfolio construction strategy, so maybe if we can talk a little bit about fees and what are the costs associated with each of these solutions that you've just spoken about.
Yeah, absolutely. So, starting with the index strategy is aiming to just track the market for whatever risk profile that you're comfortable investing in. So, for example, the balanced index or the growth index. And we're aiming to do that for you at the lowest possible cost. So the portfolio is fully invested in index assets. It's typically implemented on low or the lowest cost platforms that we can find that are suitable for your needs. For those that are engaged in our our holistic advice arrangements, this particular asset allocation solution is complementarily included within the standard advice fee arrangements. So the typical costs and which are made up of the platform's administration costs and
Mm.
the investment management fee for the index, typical costs are around 0.25 to 0.5% per annum, depending on the investment size. So moving to our core satellite strategies, these strategies are designed with the aim to outperform the indexes that we've just referenced by managing the satellite component of the portfolio. As I mentioned earlier, the core of these strategies is managed by BlackRock's enhanced strategic models, and the satellites are built by us using either ETFs representing a range of different investment themes, and we'll talk about some of the themes that we like at the moment, or a combination of ETFs and active fund managers that have a proven long-term track record of results within their particular theme. And so, because these strategies involve some active management by our team, they come with some additional costs. And so, for core satellite passive, with the total cost with a combination of platform admin fee, investment management, and a portfolio management fee for us putting the portfolio together, typically the costs range between 0.83 to 1.1% per annum. Incorporated in that is a 0.385% per annum service fee for our portfolio management. And then for core satellite active, it's 1.25 to 1.55, and that typically depends on the nature of the portfolio at any one time that incorporates active fund managers in that typically are higher cost. That portfolio involves some additional research of active managers, so it comes incorporated with a 0.55% portfolio management fee by our team. So all up 1.25 to 1.55% per annum.
Sure. Thanks, Dane. Now, we've been running these asset allocation strategies for 2 years now. Can you give us some insight into how have they performed so far?
Sure. And yeah, we've been running them for 2 years. You know, so far so good. We're really pleased with how they've performed, and both of our core satellite strategies have outperformed their benchmark since inception across all the four risk profiles. Now, just to be upfront, in the active option, the performance was held back a little bit early on due to an allocation to a private markets fund that didn't deliver as expected. We've since exited that position, and it's more a reflection of how that particular asset class performed during that period rather than a reflection of the skill of our other active fund managers that make up the rest of that active portfolio. And it's worth noting that the passive option didn't hold a private markets allocation, mostly because they're tricky to access in a passive way. And in this case, that actually worked in that particular portfolio's favour, which you can see in the relative performance. But that being said, even with that challenge, both of the strategies have still well and truly outperformed their relevant indexes. And yes, it's a strong start, but of course it is still very early days, and we're continuing to aim to focus on consistency and discipline in implementing this strategy over the long term.
Very pleasing to see this, see the initial performance, Dane, as you said, over the first 2 years. So then looking ahead now, what is in store for the markets in the next year or so?
Sure. So, look, there are a few key themes that are represented in the satellite component of our core satellite strategies. We think the next leg of market performance is it's likely to come from the areas that haven't been as much in the spotlight for a while. So some of those themes are areas such as smaller companies, both Australian small companies and international. Also, emerging markets such as China, Brazil, and Mexico, they're showing very strong relative value when you compare to developed markets such as the US. And we continue to see potential for growth in commodities and miners, especially gold and copper. And that said, we don't think it's going to be a smooth ride. That we're likely heading into a more volatile period. And look, volatility is often a bit of a cliched phrase used by fund managers and asset allocators alike, but based on the research from the team at Property Share Market Economics, we should be expecting a significant global economic downturn in the next couple of years. So while we want to enjoy the upside while it's there, we're also making sure that we're planning for portfolios to be ready when things inevitably turn. And I think that's the key difference between these strategies approach and what you would get from an index that is just going to ride the ups and downs that come with the market. But the key really is try not to get too caught up in the short-term noise. We saw that in April. If you're in a coma in April, woke back up in May, it's as if nothing happened in the markets, but it was a period of extreme volatility. And we think looking ahead, markets are going to be, a bit rocky. But that underlies the importance of having a solid strategy and as best you can, keeping your emotions in check.
Thanks, Dane. I think that was a really good overview of our asset allocation strategies and your insights into where the markets are going as well and what clients should be prepared for. So that uh, pretty much ends our video today. Thank you for everybody who has tuned in. If you're keen to learn more about our asset allocation strategies or want to see how they could be tailored to your goals, feel free to reach out. We'd love to have a chat and see how we can help you build towards your own work optional lifestyle. Thank you.
Thanks, Adil.